Alibaba shares, let's talk about that. Ticker symbol BABA, skidding to a record low in its very young life today after the company posted the slowest revenue growth in more than 3 years. But the Chinese internet search giant isn't the only company getting hit by China's currency devaluation over the past 48 hours. We saw shares of Apple fall to their lowest level since January on worries about a slowdown in China. China is Apple's second largest market in terms of revenue. Its biggest market for iPhones, and it's got Foxconn, where all the Apple phones are being made. Now, Apple is recovering just a bit, but other companies, which ones are set to get hit by China's slowdown and which ones will benefit in the long term? This way, maybe you can pick up some, jettison some others. Joining me now, Marc A, Caracal Strategies founder and co-partner. Marc was a key player at the U.S.-China Business Council, and Gillian Tett, Financial Times managing editor who's covered the world. Marc, welcome to you first. What name should we be worried about here in the U.S.? Because people are looking through their portfolios saying, I don't know what kind of exposure I have to China.
Yeah, I really think the key with China is to look at it both short-term and long-term. Certainly in the short term, I think consumer goods, companies that are importing raw materials will have some serious challenges. There's no doubt the Chinese economy is slowing. So looking at that, when you look at your portfolio, will be really key. What is the immediate, what are you targeting immediately?
What are you targeting immediately? Well, you could look at specific names, Gillian, and say a Qualcomm of the world has a lot of exposure because they put a lot of the chips into Xiaomi's phones. Yes. Xiaomi is the China leader in phones, right? I mean, there are numerous ways that you can look at a Rube Goldberg situation and come back to where you started, to China.
Well, certainly Xiaomi and the other consumer electronic companies are vulnerable. What's also vulnerable, though, are the luxury good companies, because China has been such a key driver of growth in the luxury good industries over the last couple of years. We're already seeing companies like Burberry suffer. I would expect others to be suffering too in the days ahead. And remember, Liz, it's not just about China. It's actually the other parts of the emerging markets right now are also looking more vulnerable. Well, Brazil has certainly got its challenges. Russia is already challenged, as we know. So we're likely to see a lot more turmoil than just being China-focused.
Marc, you look at Burberry, I think that's important, the luxury goods names, but some people don't really relate to that, but they certainly would relate to the big industrial makers, the ones who make cranes, the ones who make heavy equipment. What about that?
Yeah, I think it's interesting. Certainly consumer discretionary funds. Burberry is obviously a fantastic product, but do you need it immediately? Maybe not. But as you point out...
I have to have that purse, Marc.
Okay. But investing in cranes, these are kind of long-term investments. Aviation equipment, a lot of that is already coming online. I think it was pointed out, certainly commodity prices coming in, like if you're a company in Russia exporting oil, copper, Australia, Brazil, certainly there's going to be a short-term impact. There's no doubt.
Anybody worried about Apple here, Gillian?
Worried about Apple? I mean, we're talking about a fallen Apple from stratospheric heights already. So Apple is a fantastic company with many diverse aspects to its strategy.
How about an Intel, Marc? You know, Intel also gets a huge amount of business, amount of the revenue from overseas, I believe 80%.
Yeah, I think if you look at getting back to like immediate products that might go into supply chains like cell phones or computers, there certainly could be a slowdown. But if you look at a company like Medtronic, which actually is doing some really fantastic stuff in China, you know, they just made their first acquisition of a Chinese company since 2012. I think it's not an easy answer and it's not pleasing maybe, but I think it's key to look at both the immediate and also the long-term situation with China.
Sure.
One other thing to think about, which actually relates back to the conversation right at the start of this program, is the issue of debt. Because global debt has risen significantly by $57 trillion since 2008. And a significant chunk of that has come out of China, where you've had real estate companies and other borrowing. You do have a currency mismatch. Obviously, if we are looking at currency turmoil, that's going to create some big questions about that going forward, too.
Boy, it sure is. Gillian Tett and Marc A, thank you so much. Good to see you, Marc. Thanks for coming on the program.
Thank you very much.
Closing bell.